it's just the other context with Roman is like he wrote this code when there was like $10 million in TVL on ETH. Like no one could understand that, A, there was going to be all this growth, B, would be used for illicit purposes, C, you'd have like this reinterpretation of what, free speech and code is. So I just feel terrible for him. And the hope is that we can either get these guys off or we can get them pardoned.
Hey everyone, wanted to give a quick shout out to the Wormhole Foundation. If you're a Bell Curve listener, you know that transferring across chains can be a massive pain. I certainly do. I complain about it on this program all the time. That's why we are super pumped to have partnered with the Wormhole Foundation, the stewards of the Wormhole Protocol. The Wormhole Protocol connects over 30 blockchains and 6 different runtimes, including Solana, Sui, Ethereum, Layer 2s, and more. And the coolest part about this particular partnership is that they have made custom Bell Curve NFTs, which you can get and mint for free. You can claim that by just going down into the show notes and clicking on the link. All right, guys, on with the show. Hey everyone, wanted to give a quick shout out to this episode's sponsor, Flood Protocol, the optimal DEX aggregator. Now, if you are a listener of Bell Curve, you know that MEV is a massive problem, which is why we are so pumped to partner up with Flood on this season. Flood is the only gasless and MEV-free aggregator that not only gets you the best execution, but also gives you back all the extra surplus that you create every single time you swap. Now, this is relevant for both swappers and developers, but you're going to be hearing all about them later in the program. So for now, thank you, Flood, and back to the show. Hey everyone, this episode is brought to you by Uniswap, delivering the best on-chain trading experience in crypto, period, bar none. One thing I want to call out is the Uniswap extension. So say goodbye to these days of these annoying sort of pop-up wallet extensions. You lose your place trading, you have to open it back up. Uniswap now has a nice, sleek sidebar that persists no matter where you are on the web. It's much easier to use. If you click the link at the bottom of this episode, you can join the waiting list. And I'll see what I can do to get you moved up that waiting list. But definitely go click the link, check it out.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another Bell Curve Roundup. You got Michael's 1 and 2. Vance, fellas, how we doing this week?
We're ripping it. We're doing good. Feel good.
Dialed in, just like Roaring Kitty.
Locked in.
Forward in the seat.
He's back.
I'm just in the arena.
Yeah, like, some will work, some won't.
There have been some problems in the arena this week from what I hear.
Yeah, let's actually start with the Chamath stuff.
All right.
So like Vance and I found this. I don't think many people know about this article.
Yeah, so I mean, there's obviously the 0x balloon lover and the enshrining plebs, and they're like, basically terrorists for the crypto VC set. I think a lot of crypto VCs just like hear footsteps, see ghosts when they kind of see those accounts. But I was like thinking of, is there a comp for this in trad VC? There actually is. It's this guy named Eric Newcomer who runs this newsletter called Newcomer. It's anonymously named, but he basically goes deep on Silicon Valley venture firms, and the data around Silicon Valley venture firms is hard to come by. But this guy has receipts. He's got basically the entire history of Chamath's firm, all the returns, all the dirt on the internal kind of interscene warfare. And he basically has had a beef with Chamath for a few years over his SPACs. The first article he published about Chamath was the scam in the arena. Obviously a play on the man in the arena. And, he took him to task for that. And then this recent article he released this week has all of Chamath's returns, all of the interscene beef. And he basically says that Chamath can't raise any money. Everyone is left. He has no investing talent. His CFO is resigned. His GC is resigned. And then at the end of the article, he reveals that Chamath sold his PJ, and then he calls him, no longer a billionaire. It's basically just like slams him into the mat.
It's not even calls him no longer a billionaire. Forbes does not count him as a billionaire anymore. And that is the pretense for the lack of the 3 commas. But I do think
I was gonna say this reminds me of like Russ Hanneman.
It's hard to like this. So good. I mean, there's also little other nuggets in there. It's just like, I mean, keep in mind, he has been on the all-in pod for the last couple of years, and has been positioning himself as, taking licks but still surviving. He's, in the trenches, taking shells. Like now we know what some of these shells are. First off, well, he rightly calls out that he made $750 million off of the SPAC IPO craze, IPOs A through Z, which he never got past, I think, F. And then he also calls out one thing that wasn't noted is he also sold his 10% stake in the Warriors for $280 million. And so there was a lot of liquidity that was gained or obtained over the course of the last couple of years. But it seems like that has not really done anything to help what may be an illiquidity crisis here at Social Capital. So much so that he apparently, and Eric Newcomer talked to a few LPs who corroborated the story, Chamath asked, and Chamath hasn't been raising money. Well, he has been raising money. He hasn't been managing new funds with outside capital that have a management fee for almost, I think, 5 or 6 years at this point. But last fall, Chamath went to his LPs to ask whether or not he could increase the management fee on the funds that he was still managing, to which the LP said, no fucking way. And so there's just like a lot of smoke here. And I think a lot of the data is correct. I mean, the main two call outs are, he calls it the two falling outs, or the two breakups. The first one is the two main lieutenants at Social Capital, Mamoon Hamid and Ted Maidenberg, were kind of the all-stars that made Social Capital, both with Slack and Intercom as the two main investments. And, Slack went public and was ultimately bought for about $24-25 billion. I think that is the bulk of the returns that exist in the Social Capital funds. There was a falling out with Mamoon and Chamath, and Mamoon actually went to go work and run Kleiner Perkins after this. And then Ted left at the same time and now runs Tribe Capital. So for the last 6 or 7 years, the all-stars on the Chamath team have left and have been investing elsewhere. And I think this is important to note because venture is lagged at a minimum 5 years, but on average, probably 7 to 10 years. And so you're starting to see the ripple effects of the lack of that talent being within the Social Capital four walls and investing elsewhere. And, the likes of Mamoon did Figma. And I think Tribe Capital has, had a number of successes as well. So it is, kind of an issue when your best players go play for the other team. But I think that's, just kind of the surface level here. There's a lot that's going on that's deeper.
Yeah, I mean, this is obviously a non-crypto story, but it's interesting in the sense that, like, obviously Newcomer and Chamath, got a whiff of each other at some point and didn't like what they mutually smelled. So there's some sort of beef here, but I think this is symptomatic of a larger Silicon Valley venture perspective, where it's like, are there holes in these funds? How big are they? What are the best investments they've done? When? Who made them? Where did they go? And what's the future? Because, these returns are retroactive and they're not that great from these funds. But then you look at the future returns, or you assume what they could be or might be. And I think those are probably even worse in some ways. So I think Silicon Valley is having this like slow motion car crash, where it's like this delicate dance between like the investors in the funds and the GPs of the funds. And, there's incentives to keep the marks up, and there's incentives to keep the whole thing going, because venture has been an amazing contributor to returns. I mean, some funds at least over the past 15 years. There's a big question mark in terms of what it becomes. And so like the mini identity crisis that maybe the balloonist man of the world is projecting on some of the venture capitalists in crypto, I think that's like pretty vanilla compared to what some of these firms have raised $5, $6, $7 billion funds, and what is the fund worth? Maybe a lot, maybe nothing. And I think the two binary outcomes for these funds, it's not like a hedge fund where your risk of getting zeroed is the market crashes and literally goes to zero. It's like, if you don't get liquid on these companies, they are at zero.
The way I think about it is it's like this game of Schrodinger's partnership, where if you look inside what's in the LP, it may be alive, it may be dead, but you don't know, because it's just like, as long as you don't ask, nobody tells you. It's like goes on forever. But that's kind of how a lot of these firms are being run right now. It's like, well, I don't know. We'll see when all this comes home to roost. But yeah. I mean, that's also, and to tie it back to our main subject here, I mean, that's one of the benefits of these crypto funds is you just have somewhere in between hedge fund and venture fund type valuation and mark capabilities, where it's going to whipsaw quarter to quarter. You know, you may be up 2x and then down 50%. But that's also a good thing, because you actually realize and can understand more about how much these things are worth. And over the course of the last couple of years, funds and therefore auditors and accounting firms have gotten a lot smarter about this. So there are like methodologies for how you discount based on illiquidity, and you get to reasonable valuations that are blessed by like Big Four auditors, essentially. But it is pretty interesting, you know, that hasn't happened. I mean, it can't happen because there isn't an open market for these assets. But if you've got Figma that's potentially going to get bought for $20 billion, I just saw recently also Plaid, I think, is doing something like $171 million of revenue, $70 million of profit. But their last round was at $15 billion. You know, how long are you going to have to wait for that valuation to catch up? So there's either going to be a time duration issue, or some of these things are going to have to get, you know, liquid at much lower values than they previously were.
What's Plaid worth with those metrics, you think? 170 of revenue and 71 million of profit.
I may butcher this, but I think in 2021 they were doing $221 million of revenue, and I think they went down to like 100. And then in 2023 they're back up to 170, with 70 of that being profit. I think, you know, EBITDA, whatever. But the question is, what is the long-term potential of Plaid? What is the long-term potential of that revenue growth? Where does it go? Where does it tap out? Can you get to $1 billion of revenue? I mean, if you look at publicly traded SaaS multiples right now, it's like still higher than it was over the last couple of years, but we're talking like 7.5x revenue, with 15% free cash flow and 25% plus growth year over year. So can you hit those marks? And if you do, and you're doing that off of $1 billion, which is, you know, 6x from 171. So you got to go 6x. That gets you a $7 billion valuation, which is, you know, half of what your last private round was. So you got a 6x to get to half.
I mean, there's a podcast with Zahir from Split Capital. I don't know if you listen to this, Epo, but it was on.
I like Zahir though. He's been on the show before.
He's great. I mean, yeah. It was on Frank Chaparro's podcast, and his whole thing is like, you know, the liquid managers are going to do well, you know, because they have these. They're able to buy companies or protocols on the cheap if you can value them correctly. They have liquidity. You know, there's no risk of it going to zero. I just think there's going to be, in the fullness of time, maybe a couple year time period, there's going to be this rebalancing to crypto fund managers. I think the consensus right now is everyone's very bearish on crypto fund managers within crypto. But I think the LP consensus is like, these funds are comping extremely favorably to their trad VC, you know, counterparts. And I think that's really, really good for crypto, especially if you get a better mixture of liquid and venture funds. It's just going to mean that these assets get valued on more of a fundamental basis, which, you know, is good and bad, but good for the industry overall.
One kind of caveat I would add to that, though, is I think there's a difference between having liquid assets versus having a liquid fund. And what I mean by that is a liquid fund, you know, typical structure is going to be like a 2 or 3 year lockup and then quarterly redemption rights. And those liquid funds are, you know, effectively able to sell those assets as soon as they get a redemption. They have to be able to sell those assets generally, but as soon as they get a redemption request from an LP, so long as they're not side pocketed. And, you know, this gets into, you know, fund accounting, but it's extremely difficult. And so I would only say that there is an advantage, I think, in having a closed-ended fund structure that is able to buy liquid. And this is kind of what we hear as well from LPs, because historically, people who are not following this industry 24/7 are inherently terrible at being able to time the market. And so the times when they are putting money in are at market highs, which means those liquid funds need to take that cash and go buy assets. And the times when they are inherently wanting to sell or redeem and get the value back is at market lows. And so those funds are having to take those assets and sell those assets at the market lows. And it's just like counter-cyclical to what you would expect, like ideal investor psychology would be. But that's just how people are inherently. And so the liquid fund structure, I think, is brutal in that respect, because you're at the beck and call of these LPs who have redemption rates and frankly are tracking this stuff. It's like you're messing around with Russian roulette.
Yeah, I've got obviously don't have LP experience here, but I've got my old boss in my last company before Blockworks and I are good friends, and I got him to buy some crypto over the years, and every time it dips like 10%, he just texts me like diamond hands, and I just send him that meme of Arthur with his diamond hands, like, don't freaking sell anything, man. Like, I just don't.
I've told all my friends I will not respond to you anymore if you send me that text. Like for the last few years, it's just like, nope.
Yeah, don't do it. So I have a question for you guys. That's a really good nuance, by the way, about just most people don't know how funds are structured, but almost like protecting LPs from some of their worst instincts. There's a lot of alpha in the way you structure a fund, from what I'm picking up. I saw that maybe this was related to the Zahir podcast from Split, but I saw CMS did a pretty long thread about this the other day as well, which is just the relative mix of, traditional private equity versus liquid, and how liquid it's a big opportunity. There's not as much capital in it, et cetera. And basically one of the big challenges of that is that eventually you have to send that 50% down month over month letter to your LPs, which just really sucks. But what do you guys think about some of the points that he made in that thread?
They're good points. I mean, it kind of dovetails with what Zahir said, where it's like, yes, liquid is a good investment strategy, but if your LPs are going to redeem you at the lows, you don't have time for things to play out. Like if you have a quarterly gate, that sucks. And most hedge funds in crypto have a 3-year lock.
Mm-hmm.
Like most of the well-known ones that people know of have that type of lock, and then you have like a 25% gate on the liquidity per quarter. So it's not like you can pull everything at once. But I don't know. The best investment strategy in crypto has literally been going into a coma. So, like, it's kind of incompatible with this liquid manager thesis. But at the same time, that is the assets that you're marketing to LPs that you're going to buy. And I think it's about building trust with the LPs and saying, like, listen, we're going to put liquid assets in a venture fund context, and the illiquidity is a feature, not a bug. You sometimes get the questions of like, why would we pay, you to hold, X, Y, or Z asset? And it's like, A, because, are you willing to risk your career to buy crypto after the FTX collapse? And B, are you willing to hold it through these? It's like, retail and some of these LPs are pretty similar in that context. Like they get rewarded marginally for making money, but they get punished severely for losing even a little bit. And that's like, not a incentive compatible structure for managing a crypto.
I mean, the other thing too that I'll add is like, if this is not your 24/7 focus, then how are you expected to be able to keep up with the industry, all the nuances, all the things that are going on, and like understand the memes, understand the culture, but also be able to get deals and kind of like understand where things are going. And so if this is not your primary focus, every day that in venture, traditional venture, the hardest decisions you have to make are what do you buy? But the outcomes are basically decided for you. Did the company sell or did the company go public? But when it comes to crypto venture, there's this whole other side, and probably way higher, harder side, which is every day that you're holding, are you selling or are you not selling? And at least from our perspective, like we are long-term holders, which means that we've seen, 100,000% ups and then 99% downs. But like haven't changed anything about the strategy. We're holding this stuff for 5 years plus. Like, that is a really, really hard thing to do if you are managing the assets yourselves and they're liquid and you don't really understand this industry. You don't really understand what's going on with that particular protocol team, founding team, whatever. And you don't understand where we are in the market cycles, and you watch it go up and you sell it when it goes up 20%, but then there's another 25,000% that it goes up afterwards. Like, you miss the ups, and then, you know, when it goes down 99%, you're like, oh, it's dead. Why don't I just recoup 10% of my value back originally? And like, then you miss the comeback. And it's just like, it's so funny to think, you know, that there's any other way to invest in this industry if you're not 24/7 and you don't have like a 5 to 10 year time horizon.
Completely agree. Completely.
Talk about Roaring Kitty.
Yeah. Yes. Deep fucking value, baby. We are back. All right. So do we just to give like a little bit of a history on, if you haven't heard of Roaring Kitty, but Roaring Kitty, aka Keith Gill, was this, you know, he had this profile on Reddit where he was a GameStop guy for a long time, and I think what people now associate with him as engineering this short squeeze on GameStop that famously blew up Gabe Plotkin's fund. But even before that, I mean, he had like months and years of posts. He was kind of like the, you know, DFV title's kind of funny, but he actually did buy it originally because the stock was trading below book value and had a fundamental thesis on it. But anyway, he kind of mobilized this army of Redditors to squeeze the shorts.
Do you think he mobilized it and intended to do this, or he just kind of like happened to be there as this was happening?
Yeah, he did. I mean, if you watch the original video, he's like, look, there's 100%, 105% short interest.
Yeah.
Maybe he didn't cause it, but it was part of the thesis.
Yeah. And maybe it's kind of one of those things where he thought something might happen, or he was just geared up and was like, you know, F these shorts, that kind of thing. But whatever. That's what did end up happening. What was the name of his fund again that ended up getting blown up?
Melvin.
A movie got made out of this, which was actually worth a watch. It is interesting to note the take on the movie, which at the time, like Liz Warren, who's really on a real winning streak recently, came out and said, this is market manipulation and blah, blah, blah. That was not the side that the movie took at all. And anyway, you know, it's been gone. GME has been in GameStop and AMC have been in this slow bleed for like 3 years. And he just tweeted, I'll actually grab the tweet from him, but he just tweeted like the lock-in meme, and immediately GameStop pumped like 150% over the course of 36 hours. And he's been tweeting nonstop memes and stuff ever since. And actually, there's some speculation that he sold his account, but yeah, what do we think about this?
Gonna need to see a proof of life.
Yeah,
I don't think he sold his account. I mean, I don't know why I've heard he still has like $20 million. I guess more than that now of these shares, and we'll see if he bought or sold. But back in the day, his whole thing was he would post his position size every day, you know, and people would like anchor on that. And it was kind of this like fuck you movement to all these hedge funds because they were super short. And now it's kind of I don't know what it's about. Like, it's kind of like this sequel, which is not quite as good as the movie. Or the first, you know, installment in many ways, and he just keeps posting these videos. So I'm not sure what the end game is here. Like, Ryan Cohen is also now the CEO, and he owns 12% of the outstanding shares. So this could get pretty squirrely if Ryan Cohen and, you know, co start selling. The candle doesn't look great. It's down 25% today.
No, it's not great. Also, maybe an unpopular opinion, but some of those memes that he's releasing are kind of mid. I'm not going to lie.
Really?
Yeah, I think some of them are funny. The first couple I watched, but I watched like 15 of them last night, and it's okay.
I would say this is a pulse check on animal spirits, and I think they're kind of slowly reactivating. Like, if you look at the GameStop chart, it is pretty cooked. Like, it's been in a 3-year downtrend.
Mm-hmm.
But people are willing to engage with this stuff, I think, is the clear message here.
I think that's what people are speculating. I was talking to Yano yesterday, And he mentioned, he's got this group chat with his home friends who work for like SaaS jobs, back out in California, like work at grocery stores, whatever it is. Like they didn't talk at all about crypto when Bitcoin broke through its all-time high, but they've been talking about it this week post GameStop, and kind of reminds everyone that crypto exists. There's also a GameStop that you can buy on. There's a GameStop token that you can buy on both Solana and ETH. I saw that was pumping pretty hard. So there are ways you can do this stuff, I guess. But yeah, maybe it is a pulse check on it. Maybe that's the best way to phrase it.
But let's see how the GameStop meme token is doing. Not well.
Yeah, not well. Did you guys see that AMC is issuing? They're issuing like $163 million worth of there's mixed debt and equity, but they're raising like $170 million, and initially the market, like the stock price pumped on that, but that is some pretty fast issuance. That's a very quick decision to issue those shares, and I don't know.
I mean, it's just like the second time it happens. There's no like, what do we do? This is so weird. I can't believe this is happening. People are like, we're going to issue stock.
Yeah.
Like sequel, never as good as the original.
Yeah. It feels pretty nakedly, like, I don't know who's buying that. Like it's already, especially if it's already down 20-30%. Maybe it's a little bit of a non-story, but it's just kind of like a flashback from a couple of years ago when all this was going on. Yeah.
I think you're going to see basically the animal spirits continue to improve the longer that the S&P is at fresh all-time highs, which is pretty nuts in and of itself. And these things follow like pretty predictable patterns. Like 2020, stocks hit all-time highs after the COVID crash. Then crypto rallied with GameStop and all that other stuff in the background as well. I think it's a positive longer-term sign, but I wouldn't be, buying the meme stock nor the actual stock.
The other variable that I think plays into this is the second that we get some signal of a rate cut, it becomes game on.
Yeah. I don't know. I mean, I think there was a moment there where people were worried about risk, inflation coming back. What the market was pricing in terms of rate cuts has swung so much from the beginning of the year till now. I think the market was being way too liberal. They were pricing in 6 or 7 cuts. Now they're pricing in even fewer cuts than the Fed has said that they're going to do with their dot plot. And so maybe this is people they kind of got the all clear from the S&P. Inflation's not as bad as everyone thought, and it's kind of an all clear to move a little bit higher. So
I mean, basically everything, including Bitcoin and ETH, kind of ripped yesterday as soon as we saw the inflation print come down slightly lower than expected. But I think the scuttlebutt on the expectation was that it was going to be potentially higher, and people were waiting for that. And the fact that it came in below expectations, if not basically in line, was really, really positive.
I'm pretty positive on CPI generally. Like reading the various research letters that people put out, it feels like now the narrative is shifting to the hot prints in Q1 were an aberration. And like, you're not going to see 2% CPI this year, but you're going to see this thing falling pretty quickly to a rate that might be somewhat alarming. Like the May Cleveland inflation print was negative for a long time. Now it's like slightly positive. But, if you annualize what the Cleveland, and maybe we can put this up.
Yeah, if you send it to me. Yeah.
If you annualize the May print here, and you should never annualizing a single month of CPI is like.
Didn't we just say not to do this with tokens?
No, I mean, look, like I think this is a little bit more forecastable than the revenue of some tokens, and I think it's just going to continue dropping. Like
what you can do,
and PCE are already in the 2 to 3% range. CPI is kind of getting there.
So Mike, scroll down a little bit.
Yeah.
So there's the May month over month, but then exactly. So if 0.11, which is the top left of that month over month, was annualized for May, not annualized, but if it's the 12-month look back from last May, it would be 3.39 as the headline number. So, I agree that it's heading probably in a positive direction, as in lower. But what will get reported next month, I guess, a month from now at these rates would be 3.39.
Yeah.
This plus a little bit of jobs weakness. I still think there's a few cuts coming this year. I just don't think the Fed can tell people to pound sand if unemployment's, above 4 and CPI is dropping like a rock.
If unemployment goes above 4, all bets are off. But I think if unemployment stays below 4, I think there's no cuts this year.
Keep in mind it's 3.9% right now, so we're pretty close.
I would say on top of even rates, like we're still spending, we're still running $2 trillion deficits. Like that is stimulus. So yeah, I mean, look at how much we've done in terms of crypto price appreciation at 5% interest rates, which everyone said was impossible. So
crazy. And somehow the sentiment at 3K ETH and 65K BTC is worse than it was at 1K ETH and 17K BTC.
Yeah.
It's maybe time to look in the mirror.
What do you make of this? Because I can't. I mean, I listened to Santiago did a good on his Roundup with Jason last week, but he was mentioning like maybe your memory plays tricks on you a little bit from last cycle, and I do just remember. I remember this sort of fever pitch, crazy bull market, but it couldn't have been like that for 2 years. I'm sure there were months where people were questioning, is it all over or whatever, but I don't know. What do you guys think?
I mean, we used to like even further back than the bear market, we used to celebrate and go nuts over the fact that like Toyota joined the enterprise Ethereum.
I know.
And it would be, and Science Guy was posting on Reddit some like triangle charts of ETH going up. And
that's
like
way back when though.
I mean, that is way back when, but like,
that's like 2017.
and then we're getting news that like Millennium bought 2 billion of BTC, and it was the state pension board of Wisconsin bought 100. Like these were things that we literally used to just like think like like maybe in 50 years this would happen, and it's happening now. And I think it's a mixture. The sentiment is a mixture of people being short the majors. And that's Bitcoin, that's ETH. I would say that's probably Sol as well at this point. But other than this Sol, I think the other part of it is, other than the Sol ecosystem tokens, some venture tokens that have launched and done well, like not a lot of stuff has moved outside of the majors. I think that'll probably change in the near future. But with the Sol rally kind of like stalling out a little bit, I think that's kind of where the sentiment is now, where it's like, shit, like what's going to go up other than Bitcoin? And the crypto market kind of moves in a way that everyone stops paying attention to asset X, Y, or Z until they realize that they need to own it. And I think that's kind of what's playing out right now. And it'll be pretty standard. Bitcoin will go up. That will provide fuel for ETH and the next asset to get the ETF, which is ETH, and then that'll kind of trickle down. But it probably won't trickle down in the same sense as previous cycles. Like there's going to be a lot of dispersion of returns going forward.
Yeah, I agree with that. And it might be worth talking about that disclosure from Millennium. And for those of you, for folks on the who are listening who might not know, Millennium is a super well-known hedge fund. And I think, first of all, obviously it's just positive that the millennials of the world own some Bitcoin in any way, shape, or form. And, to your point, Vance, yeah, I also remember when there was like the Blockchain and Transportation Alliance. I was like, yes, Maersk is doing something on the blockchain, right? Like we've come an enormously long way from there. But I did see Chow from Alliance now made this pretty good point that, look, those guys are, first of all, they're not like the long-term structural buyers that we all want for these ETFs, right? They're usually, they've got some sort of delta neutral trade, which means we might just be looking at the long leg of the trade, which there definitely could be an accompanying short, something like that. So, and this was the whole Jim Bianco argument around, is it the long-term buyers or the short-term buyers? And it's cool to see their name, but this probably falls in the short-term trader bucket.
I mean, just to add on to that, I think Chow's point, which was really good, is that Millennium is known for a lot of trades that are long short. And so, the like spread is what they go for. And there was this really popular trade of like MicroStrategy, long Bitcoin, short MicroStrategy, long Bitcoin. Was that them? Who knows? These 13 Fs that get filed are really just snapshots of moments in time. And so you can't tell what is actually going to be held, or to your point, Mike, like what is their strategy. What we will know is that over the next couple of quarters, as more of these filings are done, where their position sizing is trending, because that will tell us more of the trajectory, less the snapshot. But I can't remember who mentioned this, but it is a good framing of kind of everything that we were just saying, which is like, we had heard anecdotally that 95% of the buying from January and through April was retail buyers. So people in their Charles Schwab account, in their brokerage account, buying IBIT, buying the Fidelity Bitcoin Trust ETF. Now, I think it's pretty clear that we start to see some of the hedge funds getting into the game. And the way that a lot of these asset classes emerge is it's retail buyers of brokerage accounts who, for whatever reason, haven't been able to buy, Coinbase-based Bitcoin. Didn't have a Coinbase account. They just said, okay, well, now I'll buy some because it got launched. Then it's hedge funds who are maybe momentum or long short, or have some position that they want to take. Who knows how long? Then it goes to mutual funds, and where they start allocating a certain percentage of the asset NAV to mutual funds. Then it goes to RIA platforms, and really kind of the long pole in the tent here is whether or not these wirehouses and brokerages will actually start to allow the ability to buy these assets. I have a friend who's a trader at Bank of America. He was telling me, so Bank of America, Merrill Lynch is sort of like your designated asset management 401k partner when you're a trader at Bank of America, because they're the same company. But Merrill Lynch doesn't support the ability to buy Bitcoin or any of the IBIT or Fidelity. And so they literally have to transfer their if they want to buy Bitcoin, they have to transfer their 401k to another brokerage, which is like, why are you leaving Bank of America? Like, why are you transferring your assets? And it's like, oh, because I want to buy like 5% of, Bitcoin in my 401k, please. It's like, no, you can't do that. It's too risky. So like, meanwhile, he's trading credit derivatives, but and so next it's like RIA platforms who have access to buy it on behalf of their clients. This is $30 trillion of assets that are managed by intermediaries who are 401k, IRA, even like pension managers, small company pension managers who are managing assets on behalf of them. And then the final step is, sovereign wealth funds and massive, pools of capital that are going to be like permanent hold. And so like each step of the process, it gets longer and longer duration as to what your investment strategy is. And we're at like step 2 right now. And eventually we'll start to get, and the other one that I think we kind of touched over or glossed over was the Wisconsin pension fund, I think, bought $100 million of IBIT. And so that's like at the end of the process, at the end of the food chain that I just described. So we're starting to see like people moving down the food chain a bit. But I think that's kind of how people should think of this in terms of the mental model of where we are. It like hasn't even started to touch a lot of the permanent capital base that everybody, said was going to be the advantage of having these ETFs live.
I've got a question for you guys on totally agree, by the way, that I think that's the Wisconsin pension is the much bigger story here. But I can see some of the more TradFi fund managers getting blown out on some of these spread trades that they love to put on because you're dealing with a market that is somewhat irrational. And I think there is a rational argument you could have said that MicroStrategy shouldn't do well, that premium that they originally were clipping, like that gets sucked out of the market when you have the ETFs. But like, what did the market do? It just pumped MicroStrategy, which is hilarious.
This trade was recommended on Bloomberg.
Yeah.
It was like MicroStrategy's premium cannot persist. A lot of people were shilling this. And then I think it's possible that Millennium had the long Bitcoin short MicroStrategy trade on, and they were the kind of bozos that got blown up.
I mean, what's the Wall Street Bets phrase to bring it all together? We can stay retarded longer than you can stay solvent.
Dude.
Yeah.
Yeah. Oh my God. we'll see. But it seems like TradFi is engaging, which is good.
Hey everyone, wanted to give a quick shout out to the title sponsor of this season of Bell Curve, the Wormhole Foundation. Now, if you are an on-chain user, which I bet you are, if you're listening to Bell Curve, you know that the cross-chain experience in crypto still sucks. Let's just call a spade a spade. We talk about it on this program all the time. Interop is still a big problem, which is why we specifically wanted to team up with the Wormhole Foundation. They are a decentralized interop platform that powers multi-chain applications and bridges. So that could be anything from DeFi to NFTs, governance, oracles, and more. So if you are a developer and you're building cross-chain assets, apps, or data or anything like that, I highly recommend that you click the link at the bottom of this episode and go check out to see what you can build on Wormhole. And Wormhole, first of all, this is a fun team. They did something really cool with us. You can actually go and click the link at the bottom of the screen, which is going to send you to a landing page where you can claim your own unique Wormhole NFT. So we're doing this with me and we're doing this with Jason, my co-founder. So help a brother out. It's a super cool NFT. I promise. Go click the link at the bottom of this episode and fill out your POAP, get your free NFT. And if you're a dev, head over to Wormhole and check out to see what cool cross-chain stuff you can build. Hey everyone, want to give a quick shout out to this episode's sponsor, Flood Protocol, the optimal DEX aggregator. Now, Flood is the perfect partner for this episode on the multi-chain future because Flood is solving so many of the issues that we're going to be talking about this season. And this is relevant for both traders and devs. So if you are a trader, you should definitely head over to FloodSwap and start trading because they solve three massive problems. 1, gasless trading. No more pesky trading fees. 2, you don't have to worry about getting front run. MEV free. And then 3, they have excellent order routing so that you know that you are getting the best price. So head over to FloodSwap and click the link in the bottom of the show notes. We're going to send you right there. For the devs out there, you can leverage Flood's flexible hooks, allowing you to make swapping a first-class primitive by adding custom order types like TWAPs. Or if you're a wallet builder or something like that, you can actually build your own order flow auction in and start recapturing a bunch of that MEV. If you want to reach out to them, go to devs@flood.bid or just jump right in the Discord. All right, guys, thanks very much. Appreciate you, Flood. Hey, everyone. This episode is brought to you by Uniswap, delivering the best on-chain trading experience, period, bar none, in all of crypto. Here's how I would divide the protocol today. There's a web part, a mobile part, and an extension part. You can say goodbye to the pop-up wallet extension, which is just not great from a UX perspective. Now what they've delivered is this nice, clean sidebar where you can just very easily track swaps, sign transactions, send or receive crypto anywhere. Just a huge UX improvement. On the web part of it, huge improvements here. You can buy and sell 700 plus tokens at your price on your terms. And they've got limit orders, which are powered by Uniswap X, and there's gasless. They've also got real-time charts, transaction logs, pool data, project information, all this cool stuff that just really improves your UX trading on the web. And again, all of this is powered by the smartest protocol in terms of Uniswap or Uniswap X. Click the link at the bottom. Uniswap extension is in alpha right now, and we'll see what we can do about getting you moved up that list. Thank you very much, Uniswap.
All right, I've got a question for you. So speaking of throwbacks to Roaring Kitty and Blockchain Transportation Alliance, there was another throwback that happened this week. So Low Carb Crusader. I'm not sure if that name rings any bells, but Low Carb Crusader was the guy that engineered this pretty, I guess, ingenious, depending on how you want to frame it, MEV exploit about a year ago. So this was the headline of this story is that the DOJ just they figured out who Low Carb Crusader was. There's a pair of brothers. I guess I just saw that one of them used to be an intern at Polychain and like had a Citadel background. So really bright guys. They engineered this you got a highly profitable trading strategy, basically. But it was a mix of it was a very clever sandwich bait mixed with a relay exploit. So I'm sort of going off memory here, but I think what they did was they essentially baited these extremely profitable sandwiching opportunities in these very illiquid trading pairs. And someone eventually, like some searchers saw this. They had to put up a good amount of money to actually capture these very juicy sandwiches. Then when that made it into a block, there was some malfunction that happened at the relay level. The way that it works is like the blocks end up getting built. The relay constructs that. It passes it to the proposer that actually has to sign off on the block. And then the relay is supposed to propagate it. Something happened where like this person actually set up a proposer. So yeah, they had to set up a proposer ahead of time. They had to bait these sandwich bots into taking advantage of this opportunity. It created this massive, multi-million-dollar exploit. But the way that these brothers set it up was that he was able to actually take the block that these people had built for themselves and just abscond with the ETH. And so this happened about a year ago. It made waves in like all the MEV communities, and the DOJ just went after these guys and is indicting them. And as it turns out, their perspective is that they did some illegal stuff. And I remember a while ago there was this tweet. I've searched for it. If this was your tweet, I'm sorry, I can't credit you. But it was like the solution to MEV is just jail, and it you know
Straight to jail.
Yeah, straight to jail. Yeah,
Take me away.
Yeah, and I don't know.
Turns out, if you find new and creative ways of stealing money, it's still stealing money.
Right.
I think also the consensus was like, this is so complicated that the government could never figure it out.
Yeah.
I don't know. Seems like
they've gotten pretty educated on it. I mean, there are some like bad facts in this fat pattern, at least from what I've read. It's like looking up statute of limitations for wire fraud and like what are the jail penalties for wire fraud. Like it was not around them quite what they were doing, I think, but they did have some prescience to understand that what they were doing was not something that was okay. But you know, it is tough, I think, because you know, if you are the enemy of my enemy, maybe you're kind of my friend. But and these bots, you know, are not necessarily the best mechanisms in this ecosystem. So if you're attacking them and you find an exploit, it's like, maybe that's like not as bad. And that was maybe the justification. So the intention, I think, may be good, but like if you find $25 million, you should probably return it.
Yeah. I think there's an interesting, the philosophical schools of thought that are bumping up against each other are, like, if I had to sum up the two perspectives here, is that one, first of all, is this really this might be a little bit of a victimless crime because, yes, even though some people were exploited, these were also exploiters themselves, right? No one has an enormous amount of pity for sandwich bots. And if you view MEV as a dog-eat-dog, dark forest kind of game, then this person was just playing this game better. And, you know, all is fair in love and MEV type deal. The other perspective is that, first of all, sandwich traders, even though no one really likes them, they're doing something. They're just exploiting publicly available information to front run. We don't think this is a good activity, but in a sense, it is kind of fair. And the other thing that these brothers did was they actually exploited a bug in the system. And so that is activating this strain of thought, which is code law. Just because, you know, there is a system, it was built with this intention. We have laws to make sure that people follow the intention. If you violate that intention, is it okay because the code is law, or is law? And it seems like
law is not law. I mean, like, we've seen
backdoor into
it out for Avi from Mango. He lost. These guys probably going to lose whatever argument they put forward, and they're being charged with some extremely serious crimes.
What was it, 15 or 25 years?
Dude, that's so long.
Yeah.
It's like, I mean, I just don't think you can reasonably expect to A, do this, or B, front run people's trades and expect that that's kosher. Like, the DOJ doesn't really distinguish between what they did and more vanilla front running. But I would assume that if you've been doing MEV, you are potentially a target. And I think it generally needs to switch from MEV to order flow auctions that are fair and transparent. Because it's great to make all this money, but if you go to jail and then are forced to pay it all back, like, what's the point?
I would guess that there are a couple firms out there today that did not love seeing this. Like, there are definitely a couple of big firms in MEV land which are probably watching this prosecution with quite a bit of interest. So I don't know. I don't really have much of an opinion on it. It just, we should all remember that the government, I can't remember which of you said this point, sorry, but the government are actually not morons, and they move slowly, but there are some really smart people that work in the government, and they are capable of understanding the same MEV gigabrain stuff that you understand. So, yeah.
Yeah. We'll see.
We'll see.
Don't break the law.
Yeah. So also on the CODIS front stuff, there was something that I am much more against that I thought was pretty not great this week that happened over in the Netherlands. So I don't know how many folks have been following the saga of Tornado Cash, but Tornado Cash is a privacy, like a mixing sort of service, which allows people who, submit their crypto to that to remain anonymous. And a Tornado Cash developer, Alexei Pertsev, has been found guilty and sentenced to 64 months in prison. So he's actually been in jail, I think, since August of 2022. So he's already been there for a number of years. I'm not sure if he's going to get credit for time served or whatever, but what he was actually accused of and I guess indicted for is money laundering. And there's a lot of nuance to this as well. This is a software. It's a protocol that anyone can use. But there's just not that much political will to defend privacy at the current moment in time, which I think sucks. I think this is shitty and pretty sad, to be honest. But
it is incredibly difficult to see this happen. And there's another couple of cases that are still being adjudicated. Roman Storm is one of them.
Yes.
One of the other, and that's, I think, in the US. So there'll be a lot of information that comes out about that. I'm not sure what actually is the status of the other founder, the other Roman.
He's on the lam, I think.
I thought that was the case. Look, this is brutal because you have on one side free speech and open source arguments that are pretty strong and robust, and on the other side you have national security and the Patriot Act, and actually the Bank Secrecy Act as well, which are being thrown at these individuals. Obviously not the Netherlands situation, but the equivalent types of laws where financial privacy is something that frankly just doesn't exist. And whenever there's sort of a fight for financial privacy, it is shot down because of those stipulations. And this is why if you're pulling out more than $10,000 from or doing a $10,000 transaction or more within the U.S. financial system, it actually goes directly to the FBI through a suspicious activity report, and then is flagged, and then is kept and filed and monitored. And so, that's the backdrop of what the financial system is working with. And so, if you're helping make transactions private, even if you have the best intentions, it doesn't seem like the government agrees with you.
Yeah, we're going to need to free Roman Storm and, Ross Ulbricht and all these guys that,
yes.
It's just the other context with Roman is he wrote this code when there was $10 million in TVL on ETH. No one could understand that, A, there was going to be all this growth, B, would be used for illicit purposes, C, you'd have this reinterpretation of what, free speech and code is. So I just feel terrible for him. And the hope is that we can either get these guys off or we can get them pardoned. Because I think what they did, obviously didn't turn out well. You don't want North Korea to launder money or gain any sort of financial resource, but just really sad to see someone facing 25, 30 years in jail. Yikes, man. That's tough.
So if anyone listening knows of some resources, I don't know, like a crowdfunding campaign for legal expenses or anything like that.
There's one for Roman. And I think Ross is more of just I think he's in jail for life.
Yeah. I think so too.
Which is, crazy. So either donate or I think the best thing you can do is vote in the upcoming election.
Speaking of,
by the way, before we do that, can I actually, so I was doing did you guys see this headline a little while ago that how we froze those Russian central bank assets? And now there's a vote that's making its way through the House of Representatives. I think it passed the House of Representatives, making its way to the Senate to reappropriate $8 billion worth of that and actually give it to Ukraine. And I saw that headline. I was like, that is insane to me. And I wonder if there's any legal precedent for doing that. Turns out there's a shit ton of precedent, which I was really surprised. So there's something called now keep in mind that this started in World War I and World War II, but there was something called the Alien Property Act, which was it's kind of this collection of different pieces of legislation, like Trading with the Enemy Act, which got passed in 1917. But the U.S. government set up this agency to seize a bunch of property which was owned by German Americans. Just took it and then gave it to people, which is nuts. Anyway, so this thing stayed in effect for like 25 years, well after the war. They managed hundreds of millions of dollars at one point, which in today's dollars is like many tens of billions. And I was just ChatGPTing around on this, and I was like, what were the implications of this long term? And it turned out that it influenced a couple of key acts of legislation, which was one, the International Emergency Economic Powers Act. But the other thing that it directly led to or laid the groundwork for was the Patriot Act. So full circle on that.
No.
Isn't that pretty crazy? A little bit of history. So yeah, it turns out there is some pretty shitty precedent for this, and no happy ending, I guess, at the end of that, because we wound up with feels like that was not the right result. So
crypto may be good at memory holding things, but the United States is really good at memory holding things.
I mean, yeah, like I read about the Japanese internment system in San Francisco, and they put where did they put
in Central California? There were internment camps in Central California where all Japanese U.S. Japanese citizens were sent.
I mean,
not great.
I think in some ways we've come a long way, and others it's like, man, that really
way to go,
dude. They didn't. I remember. So I got taught that when I was in school, but my parents didn't get taught that. They just straight up didn't teach that generation. They're like,
no, it was too close.
Yeah, no more news like this for the sake of ours.
we had to bury the hole deeper.
Dude, crazy.
Yeah. So, not great. So should we talk a little bit about there's a couple of key pieces of legislation, SAB 121, which I believe is getting voted on.
It's happening live right now. I've got the live update.
All right, you want to hit us?
Well, let's talk about it first, because it'll also give me more time to see who's voting.
Looks like we're killing it. We got a bunch of Democrat defects. Like, this is going to pass, and then Biden will be forced to veto it.
Well, so here's the numbers. It's looking like it'll be 60 to 40, or 59 to 39 if two people don't show. But that's a 10 vote swing if for those counting at home. But the problem is 67 or 66 is what is needed to be able to overthrow the veto. And we're not going to get there.
You don't think?
No.
I mean, there's 1, 2, 3, 4, 5.
There would have to be some changes left.
I mean,
but what this does is it puts a very strong message out that it is a bipartisan voted on bill. And let's talk about the bill for a little bit. So basically SAB 121 is a repeal of the decision to not let financial depository institutions custody crypto assets on behalf of clients. Right now, what we do have are ways for institutions like Fidelity, who's a brokerage, to be able to have Bitcoin and Ethereum within their Fidelity digital assets. But for instance, JP Morgan is not able to actually custody these assets on behalf of their clients. And so this would allow depository institutions to be able to custody crypto assets. Why is this so, unpopular? Or why is there actually any contention here? Well, we've got Fidelity being able to hold some, but JP Morgan can't, and Coinbase can. But Wells Fargo can't, it really, in my mind, doesn't make very much sense. It's obviously a political move. And I think what's happening right now is that if you do have a 10 vote swing in the Senate, and I can't remember exactly what the vote was, but I think it was plus 12 or 13 on the Democratic side in the House. It's a bipartisan vote. And at the same time, that is happening after Biden and the Biden administration said they will veto this if passed by both the House and the Senate, basically putting out a shot across the bow saying, if you vote for this, doesn't matter, we will veto this. And they knew that they're...
Why did he do that?
Because, and I mean, the scuttlebutt here is that there is someone else who is not in the administration who is pulling all the strings when it comes to economic and financial policy. And really one of the interesting points is, whether or not he's a one-term president or a two-term president, we'll find out in November. But when you're the person who's not in the administration, who's pulling all the strings and has the ability to dictate economic and financial policy, you're going to do things that are pretty brash and maybe not in the best interests of the soon-to-be elected upon president. And you recognize this as potentially being a one-term opportunity for you to have control over the situation. And if that's the case, you're going to do things that run against the grain and run against, Congress. And so in this case, I think it's a prime example of something that obviously Congress wants, but it's not something that you're going to allow because you recognize your potential time to influence policy is fleeting and could be over on November 9th.
I mean, it's also worth thinking about what are the other Hail Marys they could throw in the waning days of an administration that wants to set policies in stone. I think there's good things. There's also, I mean, it's kind of like when Jay Clayton left the SEC in 2016, and he just, that was when the Ripple case got filed. That was, I forget if there was another.
It was just the fact that he, on his last day as serving as chairman of the SEC, filed the Ripple case. It was kind of like, poof, I'm out.
Yeah. And he's suspiciously pro-crypto now, I've noticed.
Funny how that happens.
Yeah, it's almost like you get paid to go to these events and speak positively about crypto.
It's like Ben Lasky, who designed the bit license.
Oh my God.
And then started a consulting firm right after he left to advise companies on how to pass the bit license.
Dude, absolutely nuts.
Yeah.
Oh, wow. I found the live feed for this vote.
Where are we at?
How are we doing?
We got 43 yeses, 27 no's, and I mean, these people are literally putting paper ballots in a box. It's amazing that our government is still run like this.
No, it's not. It's not actually paper ballots. It's a yes or a no in a roll call.
It's just nuts. My God.
I'm with you.
So here's the list. This is just coming from the Blockchain Association. Gillibrand, Hickenlooper, Peters, Tester, Cinema, Rosen, Kelly, Casey, Booker, and Lou John.
Hey.
That's 10 Democrats voting for this.
Dude. So, yeah, the politics stuff is just these sorts of things. It's just
you guys had a little dust up.
I know we did. We got a good amount of blowback. Yeah, I understand also why people were upset with that. My thing is we publish different perspectives. Molly Jane was totally within the right to write that. We're going to have Selkis is actually writing something the other side of that. And
oh, man.
Yeah, I know. So where do you think he's going to fall?
Scorcher.
I know. Scorcher, dude. But yeah, I mean, it was just interesting to me because we've always had this threat of legislation hanging over us and regulatory fear, but we've never the nerve of politics right now. I think that's where the zeitgeist is and where people have fully drawn the battle lines.
Well, the other thing too is it's been sort of beneath the surface. Anyone who's paying attention, anybody who's in this industry is this is 100% a partisan issue. But what happened last week is on the same day that you have the Biden administration writing a letter to Congress saying, if you pass this, the SAB 121 that's voted on right now, we will veto it. The same day, you have Donald Trump hosting a bunch of NFT holders at Mar-a-Lago getting asked the question, how do you feel about crypto? Oh, it's a good thing. We're going to support it here. We're not going to push it out of the country.
King.
Like yin and yang, completely opposite perspectives happening coincidentally on the exact same day. And what that does is it tells the world that our two potential presidential candidates are 100% on opposite ends when it comes to crypto. There is a right and a wrong choice when it comes to voting on if you're pro crypto, if you're not. If you want to vote on other reasons, that's totally fine. But if you're a single issue voter, there is a yes and a no answer.
One other thing on the regulatory side. So there's like kind of three things brewing regulatory. SAB, I forget what it's called. It's the repeal of this custody rule. There's FIT, which is the market structure bill. Mm-hmm. And then there's the stablecoin bill, which is like kind of, I mean, like, I guess it's like somewhere in the ether, but like, it seems like that's the closest to actually being potentially passed. But FIT will also get a vote in the House. And like, you look at these regulations and like, I think where we're at on FIT is like, it's great that we're trying to do this. This probably isn't the bill that will pass, nor the one that is probably most positive for the industry, but it certainly sets up a lot of guidelines and sandboxes and regulatory pathways for companies to succeed. But this stuff is going to be legal pretty soon here. And it doesn't really matter which party is in power. I would say like Republicans, you're going to get probably on the margins more favorable bill, a bill that passes faster, et cetera. But like crypto is going to become legal. And it basically has been illegal for the past, since the crash, basically.
Mm-hmm. So I got a question for you guys. It's something that I think is a pretty interesting topic of discussion, which is these two different viewpoints. I've heard Nick Carter say this as well. And the two viewpoints around the politics stuff would be, you know what, enough is enough, right? We've got one party which is clearly pro-crypto in the form of the GOP right now, and the Democrats are doing all this underhanded stuff, honestly pretty demonstrably and kind of out in the open at this point, and we should just align, right? And then there's the other perspective, which is, look, at the end of the day, these administrations shift their perspectives quite a lot. Like, and here, a good example of that would be in, remember when we went to war in Iraq back in the day, and it was like the Republicans are so pro-war, and now that's flipped, and the Democrats are like, we got to go to, back up the Ukrainians, and all the Republicans are like, no. So these things shift over time, and the other perspective is that, look, crypto is a net neutral technology. We don't want to get associated with one political party or the other, because those things just shift over time. I'd be curious where you guys fall on that spectrum, and I think it would be an interesting case study. I asked this on Twitter and no one gave me any super interesting stuff back, but I would love to get the history of Silicon Valley, which I associate with being very left. And I don't know if that's just a byproduct of it being in Silicon Valley. I don't know if that was intention, or like in California. I don't know if that was an intentional strategy to get better regulation at some point. Is that I just don't know the history.
Before Michael digs into the Silicon Valley history, I just want to say that like when one side is shooting at you, it's pretty easy to tell who's on your side. Like, I don't think there's like a controversy there. And also, I think being a single issue voter is fine. Like imagine if we were going to ban journalism, EPO, one party, say it was the Republicans. I'm pretty sure you would vote Democrat. That's fine. I think you have the right to call yourself a single issue voter, on whatever issue that is that you prioritize.
Yeah. I don't even mind saying I'm extremely conflicted on this. I've actually said in the past, like, if I was a single issue voter, I'd be a single issue voter on education. It's just a family value. My family beat it into me. They sacrificed a lot for me to go to these good schools, and I think it's super important. But other than that, I've never been a huge fan of single issue voting. I mean, for me, what is happening right now is also existential. From Mike personally, not me in my Blockworks hat. Like, dude, yeah, I've been in this industry for 6 or 7 years. Like, my entire financial net worth, and honestly, my personal, the way that I think about myself and what I've been spending my work doing, like, I'm all tied up in this shit. I think a lot of people probably feel decently conflicted at this particular.
Well, I mean, I think a lot of people who live in the United States feel decently conflicted.
Yeah.
And just to like put a finer pin into it, I mean, Ryan Selkis talks about this. If certain changes don't happen in the fall, being a U.S. crypto person may be something where you're focused on outside the U.S. basically henceforth. And that's fine. I mean, look, most of our founders, most of our portfolio companies are outside the U.S. Like, we're business as usual for us. And I think for you guys too, like, London DAS and thinking about Asian conferences and still have permissionless in the US, maybe go somewhere else eventually. But like, it just would suck if we have to focus 100% of our efforts outside the US because that's where this innovative new technology is happening. And to go back to, Silicon Valley stuff and sort of like the difference of the parties, keep in mind, it was the Clinton era and Al Gore famously said, "I invented the internet." It's like, no, you basically, he said that.
Oh yeah.
He said, "I invented the internet." It's like, that's
funny. Come on. That's I almost respect that. That's hysterical.
And then he became a special advisor to Kleiner Perkins afterwards. But the funny part is, I mean, it was the Clinton era and administration that passed laws that basically enabled the commercialization of the internet. And that, in my mind, so the whole history of Silicon Valley goes back to silicon, transistors, et cetera, a lot of that actually spun out of government-funded programs because you had to build hard tech, you had to do hard science, material science to be able to invent that technology. But then it was the internet that kind of put Silicon Valley and the massive, value that's been created for this country on the map. And that was enabled by deregulation from the Democrats and putting safeguards in place to enable the commercialization of the internet. It was illegal up until 1993 or 4 to be able to have commercial transactions that existed on the internet because the internet was created by DARPA, a government-funded entity. And so like a lot of history there, but it's so funny that the Democratic Party, which used to be in favor of innovation and used to be in favor of technology and growth, is now the opposite. And it is now the Republicans who are in favor of all of that. I mean, even look at the FTC and all the different administrative bodies that the Democrats are pushing right now. There's no M&A activity anymore. There's no IPO activity. I mean, IPO because it's a tough market. But like nothing can exist.
Tough market.
Tough market. But nothing can really exist in the innovation economy under the administration of the Democrats. And I think that is stuff that people are starting to recognize. There was also an article just recently, I think yesterday, with David Sachs talking about all of this too. And I think smart people in Silicon Valley are starting to recognize this.
Let Kamala cook, okay? She feels more improvisational than Joe Biden. I'm ready for her to cook. Like, if I had to choose between both of them, I would choose Kamala. I don't even know what that says about me, but I would choose Kamala.
It says you're just so goddamn open-minded, Vance. That's what it says. All right. Well, one story that I just forgot about, frankly, but we could just pour one out. There was a 500,000 block reorg on the Gen chain, so maybe we can save that one for next week.
Jail. You can't fucking do that.
That's a long time. I don't. I should know if they're back up, but it was like 2 full days. Now the block time for degen is sub 1 second. So 500,000 blocks sounds a lot worse than it was like 24 hours at that point, or maybe 36 hours. But yeah, you can't go down for that long. I mean, that's a long time. And yeah, Conduit is running the sequencer, I'm pretty sure. So we haven't gotten a full postmortem yet, but I guess we can pour one out for our homies and just, yeah, but we should probably, I don't even have a comment, actually. I don't know. I just thought it was worth bringing up.
We'll pour one out spiritually, but I mean, let's see how Degen's doing post reorg.
Probably not great.
Not terrible, not great.
The market weirdly doesn't move sometimes. Like, remember when Solana went down for the first time in 9 months? Didn't move up. No one here.
What's that name? Oh, here we go again.
Yeah. Dude, I had one of my like first forays into stock trading outside of Netflix was Chipotle.
Let's go.
I got Chipotle, and I bought it after that norovirus scare because I was like, "Oh, Chipotle is great. Like this thing's gonna go back up."
That was a live fire exercise.
Yeah, it was. But the reason it was so bad is they had multiple scares. They had like 2 more. And after the second scare, I was like, "Fuck it, these guys can't do anything right." Like you had one job, and I sold like the Pico bottom, and it's just been up only ever since.
Just know that when you sell, you should understand that it will go up.
You should, yeah. 100%.
You should sell knowing that it will continue to go up, and you will be butthurt. These are the universal laws of the universe.
It is 100%. Unless you decide not to sell, in which case you got a lot further down to go, which is kind of another fundamental law.
That's
in the words of one of our LPs, if you don't want to pay taxes, you can just round trip it.
Just round trip it.
That's awesome. All right, fellas. All right. We can end it there. See you guys.
Hey everyone, Mike here. If you're a Bell Curve listener, you know that transferring assets across chains can be a massive pain. I certainly do. I complain about it on this program all the time. That is why we're incredibly excited to have teamed up with the Wormhole Foundation, the stewards of the Wormhole protocol. And the coolest part about this particular partnership is that they have made custom Bell Curve NFTs, which you can get and mint for free. Click the link at the bottom of this episode, get your free NFT.